Yesterday, the euro extended its recovery against the US dollar, hitting a new one-week high. Likewise, the British pound gained, offsetting recent losses. The driving force behind the rally was a Fed Chairman Jerome Powell's speech. He hinted that the Fed could keep interest rates unchanged at its November meeting, citing the latest macroeconomic statistics. At the same time, he did not rule out one more rate hike in December as the final phase of the tightening cycle. Against this background, the risky assets gained strong upside momentum. As for today's macroeconomic calendar, it includes data on UK retail sales. Retail sales volumes are expected to slip in September, which may exert a downward pressure on the British currency. Germany is set to release data on producer prices, but this report is unlikely to have a severe impact on market sentiment. Traders may also take notice of the federal budget balance, as well as speeches by Philadelphia Federal Reserve President Patrick Harker and Cleveland Federal Reserve President Loretta Mester. If Fed officials express the need to stop their rate hiking campaign, the euro will extend gains on a continued slide in the dollar. And now let's move on to technical analysis. According to the euro-dollar trading chart, a false breakout at 1.0558 will create a buy signal, thus driving the price up to 1.0586. If the price breaks above this level and tests it from the top down, a strong buy signal will be generated. Thus, the euro will have a chance of hitting a new one-week high, rising above 1.0612. However, consolidation above this mark is unlikely today. A false breakout at 1.0612 will make it possible to go short. Short positions can also be considered if the price fails to stay firm at 1.0586. In this case, the euro is expected to dip to 1.0558. If the price breaks below this level and tests it from the bottom up, the European currency will plunge to 1.0531. At this mark, I recommend going long on a rebound, counting on an intraday correction of 20-25 pips. Speaking of the British pound, bulls managed to quickly win back losses incurred from Powell's speech. Currently, the pound-dollar pair is trading below 1.2145. A false breakout at this level will drag sterling down to the level of 1.2092. Notably, the British pound came under pressure after the Bank of England said that it was in no hurry to raise interest rates, and its further policy would depend on macroeconomic data. If the price breaks below 1.2092, the way to 1.2066 and 1.2038 will open. Buying the dip will be possible only at around 1.2092. As an alternative, one can go long on a rebound at 1.2066, counting on an intraday correction of 25-30 pips. If bulls regain control of 1.2145, sterling will most likely surge to 1.2180 and 1.2216. At the level of 1.2216, traders are recommended to go short on a rebound in the hope of a 25-30 pip move. Going short at 1.2180 and 1.2145 will be relevant only amid a false breakout. Good luck and have a great weekend.